Good morning, good afternoon, good evening, and welcome, depending where you are on the planet, to the Wednesday, the 20th of July, Bull versus Bear webinar. Steve Miley on the call for trade day. Welcome, everyone. We're going to go through our usual regular run through in today, calendar, what we've had, what we've got coming up. We're going to take a look at both the data, the main economic, the macroeconomic data calendar, and then also the earnings calendar. We'll also take a look at articles from the major news wires, what's been happening to markets over the last 24 hours, what's impacting from a fundamental macroeconomic geopolitical standpoint, and then we'll take a look at some charts. What's interesting right now in the markets that you guys trade. Right, let's kick off. Let's a little recap from yesterday. Wall Street closes sharply higher and strong corporate earnings in here. Johnson & Johnson and IBM fall on dollar impact on warning, but Boeing rises on deal to sell jets to 777 partners. So generally overall yesterday, a good day. Biggest one day percentage gain for the Nasdaq since June 24th. A positive day. Earnings starting to shape up a little better. If we go take a look at the earnings calendar for yesterday in here, it's kind of mixed, but you see mostly green. And one of the negatives actually there, which ended up not really being a negative, but you see one of the red is the actual revenue from Netflix. But if we go take a look at obviously what happened with Netflix, there was an expectation. They'd marked for subscriber losses of I think 2 million, and it was only lost about 1 million, right? So let's have a look in here. So yeah, quarterly loss of subscribers is smaller than some had feared. Management expects 1 million new subscribers this period. They lost more than a million customers in the first half of 2022. Netflix Inc. had a massive, so basically better than expected, better than we're talking about losing 1 million instead of 2 million. So they were expecting to lose 2 million, they only lost 1 million. So certainly deemed as a positive on the Netflix results yesterday, or the guidance in here. So the guidance positive on Netflix, and that helped markets in the after hours trading as well. So as we said, it says in here, market's already up on relatively positive data from yesterday on the micro calendar, on the earnings calendar coming through, and then after the bell, after the close, we had the Netflix, which was, although red and green in here, we had a red on a miss on the revenue. The loss of users in here was definitely deemed and seen as a positive. Okay, let's take a look ahead. So strong day yesterday, a strong close for the US equity indices, and then certainly still looking bullish as we go into today. Let's take a look at a quick look at the macro calendar in here for Wednesday. So we've had some important data in here. UK CPI still running hot. Above expectations, 0.7 expected on month of June, 9.3 for the year on year, came in at 0.8, 9.4, so both above expectations there. So that's a little bit of a concern. Going into today for the US, it's a quiet day today. Canadian CPI, probably should keep an eye on that, even if you're not trading Canadian indices. Maybe you're trading the Canadian dollar. Not many of you guys doing that. But if you are trading the US indices, the Canadian inflation data could give us a guide, similar to the UK data in here, to where we're heading. So that could be interesting. Maybe just keeping an eye on that. We've got that coming up in 56 minutes, but that's probably not going to be a big impactor. Existing home sales in here, red, doesn't think. If you're trading oil, and potentially this could have an impact on the indices, the crude oil inventories data we get at 10:30 Eastern time today. So we've been watching out for that. Overnight tonight, we get the Bank of Japan. So certainly watching out for that maybe. But Bank of Japan doing nothing at the moment. Super dovish still, and so probably not expecting much. More importantly, going to today's calendar. And I've done the filter in here so we've only got the US stuff, but remember to tick, if you're using this calendar, tick the 3 stars in here, otherwise you're going to get everything, and that's just too much. We're only really looking at this as with respect to how it's going to affect the major US equity indices. Top of the list, obviously Tesla, that's coming after the bell. Okay, so after we've closed today, but obviously in post hours and going into effectively tomorrow's trading session, potentially Tesla. Depending on when they release, obviously, but after the bell today. We also have ASML, Abbott Labs. They're going to be probably important to watch as well. So those ones, all of the top 3 there, watching out for those. Sorry, we've already had these in here. ASML, a slight miss, but it is a very slight miss. And then Abbott Labs actually beating. So so a mixed bag there from those two. Sorry, I missed that those already reported. Tesla, the big one now, but after the bell tonight to be watching out for. Let's take a look at 5 things you need to start today. Well, no surprise, they lead off with Netflix, which we've already discussed in here. Federal Reserve still has quite a way to get out of inflation under control, doing the Blackstone Group. So just a report, basically saying the tightening, they might need to do more than they're pricing in at the moment from Blackstone Group. Putin in here signal that Europe will start getting gas again through a key pipeline, but unless a spat of sanctions is resolved, flows will be tightly curbed. And then we've also seen, we're going to talk about it shortly in here, Europe reacting to that. So we go in here, look, US futures drop with stocks the same. So a slight drop in here overnight, but nothing significant. And markets still going into the day looking relatively healthy. If we look at where we are on European indices, we did get a dip, but we got a rebound as well. So kind of mixed, kind of fairly unchanged. You know, the German index in here about 1/3% down. The French index only 0.2 down. And the FTSE only 0.2 down. So European markets this morning are fairly unchanged. And if we go and take a look where we are on US stocks, obviously it was a good day yesterday, up like 2.5%. As I said, a good day for the Nasdaq. You know, over 2% for the major indices yesterday, and we've hardly dropped really. We did have a slightly deeper dip in here, but we're down like 0.2 in here, and Nasdaq actually effectively unchanged. So markets are hardly lower. You know, it's saying we were a little bit lower in here this morning, but US futures drop, or it's hardly a drop. They're kind of marking time. EU wants to ration gas to prepare for the day Russia cuts it off. So we are seeing this is a developing story, but not really too negative in here. European stocks erase gains amid news on Russian gas. So the markets in here initially a bit lower, but they raised those gains through this morning in here. And say potentially that in Europe they're going to have to start rationing gas. So Europe races to cut Russian gas usage amid Putin's warning. Okay. But that's been a developing story, nothing really new in here. And again, EU countries are asked to cut gas demand by 15% until spring. Just a note in here, so sterling stabilizes for dollar and euro. So we did get that UK inflation surge, higher than the market had forecast. On the back of that, we did see the pound weaken out a little bit in here, but having dipped lower in here, trying to rebound. So not a really big impact from that rather high inflation there. Market is kind of repricing in now that Fed central banks, the Fed, the Bank of England, are very much in a more hawkish mode. So certainly they're reacting to that by not really reacting too aggressively when we're seeing inflation numbers higher than expected. We saw it last week with the US, right? The US CPI higher than expected. That marked the markets, the stock indices sold off and rebounded. Markets now very much aware that the inflationary pressures are there, that the central banks are trying to control them. They've been fairly aggressive. The central banks from being behind the curve are now probably up with the curve, if not even ahead of the curve on what they're trying to do with inflation. The bigger concern is how much it's going to slow the global economy. We'll really check these out. Right, let's take a look at some of the charts. So actually, just a quick nod to the Fed tool in here on the CME Fed tool. So the CME Fed tool in here now, as I say, this has been falling. We mentioned this. This was up at over 80% straight after the CPI data, and now down at 35%. That's for the 100 basis point hike at the next meeting. And pretty much, though, we're expecting where we were previously before that CPI data, a 75 basis point hike now at 65% probability of that for the next meeting, which is just over, actually, 1 week today. Right? We get the result 1 week today. Right, let's take a look at a few charts. Even though we've dipped in here this morning, this is on, let's actually start with the S&P. So we have a slight dip in here, but having made new highs overnight with Netflix, slight dip, but pretty much unchanged. Really strong candlestick. This candlestick in here called a Marabuzo, strong sign of trend continuation. Look at we've reversed, having been flirting with this downtrend line, this more accelerated downtrend line that comes from 21st of April. The market emphatically through there, importantly as well, above that peak there, which we flagged yesterday at 322, and then the high here at 350 in here. The market getting close to that last night, and then in after hours getting above there. So we're through these. This makes this a much stronger basing pattern and really leaves upside risk into the next week or two, going into the summer, up into this kind of consolidation area up here, I think. So 4100, 4150. That's the bigger target over the next 1 to 2 weeks. What does it mean for today, though? Let's step in 15-minute chart. So we have dipped back lower. Going to get rid of all this old analysis because it's kind of redundant now. Okay. So you can see in here, yes, we've dipped lower in here this morning. Yeah, we had this setback, but nevertheless, the market's trying to rebound. This looks to me still positive, right? If we do the trend line up off the lows, I'm going to draw it off of this one first, and we'll then maybe redraw it out of here. But I'm going to draw it off of here first. And we extend it out. This is the proper way to draw a trend line, by the way, guys. Not right, putting it out here. This is not the way to do it, right? I'll just show you. This is not the way to do it. To kind of pull it out here and then kind of aim it and try and pretend to catch it on the bottom here and just have it over here, right? Click it to the actual low, right? Click it to the low so it's done properly and then extend it out, okay? So you can see the market went flirted with it. I think this is the true trend line. You can redraw it here, right? You can draw it off this new low. Okay, but I think the higher one is the correct one, okay, because the market, it shows you effectively a third touch. You draw it off of these 2 points, the initial 2 points. It goes, actually, it flirts with it here, you see, goes down, touches and comes off, flirts with it, goes below, and then backs quickly above, and then comes back closer and moves away again. So we're nowhere near challenging this trend line. So there is risk we dip towards this trend line. At the moment, it's going to be down at around 38.96. I don't think we're going to see that. I think we're going to see the market turn back higher from here going into the open. And then if we've got look inside here, we've got some little support levels in here. So these kind of horizontal lines here, these little swing lows. So whilst holding, for me, particularly this one here, so 39.02, whilst holding 39.02, I think this looks positive, okay? So that could be a potential trigger on the downside through 39.02. Whilst above there, I want to play it from the long side. Where's your trigger as it goes back higher? Well, for me, it's through here, right? You just take either this one off the top, okay? And just zooming in a little bit. Or if you want to be more aggressive, I'm not sure what went on here with the data. Seems to be a gap in the data. Not quite sure what happened there. Whether it gapped lower or not. I don't think it did probably gap lower. Let me take it right the way into like a 1 minute. I've kind of got a gap in the data. I don't know whether it did gap lower there. Maybe there's some news out. No, there's actually, for some reason, got a gap in the data from 11.28 to 11.43. Not quite sure what's happening there, guys. I don't know if you're seeing that as well on Tradeovate. A gap in the data, which seems a little bit worrying. But I'm seeing that. Okay. But let's go back to 15-minute chart. But yeah, this trend line in here. This one in here, probably more important. Okay, and that's probably the true trend line. Don't know whether that's the true trend line because obviously because of the gap in the data. But yeah, back above, really back above these highs. So around 39.48, 39.48, 47 3/4, 49, 39.50. Actually, that was the old high as well over here, right? Remember? So 39.50. Yeah, back above 39.50, it looks bullish again. So maybe holding a fire till we see a break back above there. If you want to be more aggressive, maybe back through the breakdown point here, but I'm not completely comfortable with this being the correct low because of the gap in data. Let me take a look at the NASDAQ. So similar story. NASDAQ above the peak here and here yesterday. Strong Marabuzo candlestick. Little pip higher than a dip lower in here. Let's step in here. I'll switch it to the same chart. We've got a 15-minute. Again, gap in the data. Market holding above that low there. That's going to be an important one. So just take a horizontal line on that. So look, nicely holding above that low. That low being 12,224.25, and I'm trying to rebound from there. And again, I'd add like the little counter trend line off the top. Probably want to see it back above there, or a little bit more of an aggressive line coming down through here, back above the counter trend line through here. Signals more bullish. Probably want it back above there. That high, 12,323 3/4, then looks more bullish in here. Once it told that low there as well. Yeah. Let's go to the bigger uptrend line. In here, get rid of some of this old stuff. Oh, I don't want to take off all the analysis that I've just done in here. So let me see if I can do this. this way tidier. And then we'll take a look at where's my toolbar gone? Oh, here we go. Off the low, through here. Now again, do we draw it through the first one or the second one? Yeah, again, I'm going through the first one here. That hasn't quite snapped to the low. Got to re-snap that. See, I think that works better. Again, look, touches, breaches, comes back above, impulsively moves away. So there is risk that we come back to this trend line. That's down at like 12,100, 10, 12,100, 00. 12,100, 12,110. But for me, it's holding in fairly well at the moment. So looking for the swing back higher and going with the break back higher above these counter trend lines. Guys, if you want as well, anytime, please do. There's a chat below the live streaming. See a lot of you guys live streaming at the moment. So if you want to ask any questions, throw them in the chat or anything you want me to look at. I'm going to give a quick nod to gold and oil, but then I'll wrap up unless there's any questions. So gold, first of all, dead cat bouncing. Kind of double checking here, we're on the right front month for gold. Any gold traders out there? Tell me what the correct front month is. I still think we're in August. Yeah. So, but like dead cat bouncing. If I step in and look at the data, it should. This is the good data. The data looks good. So your dead cat bounce. The real worry. You know what the real worry about this? And I said it yesterday. I'll say it again today. Right. Look at the dollar. The dollar's been going down. A little bounce today, but been going down for like 3 days. This whole rally in the dollar that we're seeing in 2022, the strength in the dollar, okay, because of the more hawkish Fed, and now we're seeing a rollover in that as the other central banks become more hawkish, okay, as the Fed have maybe reached peak hawkishness. So we're seeing this rollover in the dollar, yeah. Now that has gone hand in hand with weakness in gold because there's an inverse relationship. There's a long-term inverse relationship between gold and the dollar, between commodities and the dollar, in fact. But because obviously they're quoted in dollars, right? So otherwise, if gold doesn't move with the price of the dollar move, then gold is changing price in every other single currency, right? So this keeps so there is that natural inverse relationship between gold and the dollar. Okay, so in here we see gold has been going down as the dollar strengthened, but now we've seen obviously flipping back to the dollar chart. Dollar's rolled over, dollar's gone down the last week or so, and if we go back to the gold chart, dead cat bounce. Why is it a dead cat bounce? Because dead cats don't bounce. Just no rebound here whatsoever. The market can't even muster up any kind of significant rebound and hold on to it. And so for me, this is still really negative. If you get any kind of if dollar rebounds a bit more aggressively, this could really collapse lower. So that's a real concern for me. And if we go into a 30-minute chart, sideways city in here, can't hold on to any gains. It's in a triangle at the moment. It's in a consolidation pattern. But for me, all the threat is a bear break. Let's go take a look at oil. Oil been whipsawing a little bit in here, but continues this general upward trend. Okay, I think a base is in. We've spoken about this the last week. We spoke about the inverse head and shoulders down here we got previously. Now it's in a good uptrend, higher highs and higher lows. Oh, we are on the wrong front month in here now. So oil has definitely rolled over. September's the front month now. So I've got it on the QLQ. So we actually need it on CL, not QLQ, sorry, CLU. Okay. No, but then you still got the same inverse head and shoulders down here. I'm going to get rid of this old analysis. Also get rid of the old charts. Otherwise I'll forget tomorrow. So let's get rid of these. And I'll add in the CLU on the daily chart. Whoops, no, CLU. I'll have a daily chart for that as well. So you can see this recovery, decent recovery in here. And then the important one in here now is to watch is that downtrend line. Now that's going to be up around 101.80, 102 really. And you see it on these peaks in here. We've got these swing highs are 102, 101.97, and that's pretty much, yeah. So no wonders on the September contract now. The market's a little bit reluctant to take out those peaks and take out that trend line. That's going to be critical going into the next day or two. And you see the market rolling lower, a little bit concerned. But again, we go, and often in here, look, it's not, you don't draw the trend line. When you get these very sharp rebounds in here, often you've got this inverse head and shoulders down here. It's not usually best to draw the trend line off the first low, okay? Normally, often you get this spike higher when you get a basing pattern going, when you get a turning point, and then the real trend line, the real trend occurs in here. Let me get rid of this. Trend line, the real trend comes from the second low, not the first low, but the second low. So I would argue here the real trend comes from here. So this is the true trend line through here, okay? And then you could then, if you want, draw another one in through here. So you can see the market right on flirting with that. This is the buy opportunity. If you think we're going to hold on oil, okay, it's gone right down to this more accelerate. Let me just get this right off that low. There you go. Okay, look, you're holding there right now. I want to see it hold these, and you can see it's gone and tested twice here and here. So the low there earlier on overnight, 98.62. Again, we've got now 98.65, held above that 62 low. And you've got a little swing low in here. See this one in here? Okay, put that on as well. So it's respecting this swing in here. Okay, that one there is 98.28, so it's respected that with, let's say, 98.65 and 62. Yeah, I'd be looking. I think this is a good buy opportunity on oil, and you'd be then looking at the. Remember, you got the data later today though. This like little counter trend comes down through here. Maybe looking to buy oil back above this little counter trend. Let's get that right on. So we get oil back above. You know, if you want to be aggressive, it's up through here. This peak. 99.57 on the SEP contract, and that'll be reversed with the trend line as well. So yeah, watching out for that. If it takes out these two lows here, certainly if it takes out that low there, if it takes out the 98.28, if it takes out 65.62, 98.65, 62, and then 28, then it looks a lot more bearish. But for now, maybe this is the opportunity. You could have a tight stop, buy it here with a stop below, like 98, I don't know, 98.00 or something. You have a fairly tight stop, given that this is moving $3, $4, $5 a day. Okay, any questions, guys? I was going to wrap it up there. No one wants to play? Okay, no worries. Right, guys, I'm going to wrap it up. I'm going to wish you all a great trading day. Stay safe out there. I'll be back with you with another. Actually, James will be back with you tomorrow with a bull versus bear webinar. I'll be back with you after that. Probably won't be speaking to you now till Monday. I think James is on Thursday, Friday. So, but I'll be back with you guys or definitely by Monday, potentially before. Have a good one.